Platonic Wealth Advisors founder and president, Mark Avallone. Mark, great to see you. What did you make of the president's speech last night, and how does that change the way you look at 26 from an investing standpoint?
Well, good morning. And I think as investors, it is always helpful to have an optimistic outlook. Look, markets are up 7 or 8 years out of 10. So all the pessimism that we hear is often misguided. And I think having an optimistic approach for investors in 26 can be a very legitimate course of action. Look, we're going to have the benefits of the big, beautiful bill, which do include corporate tax incentives, a lot of incentives for manufacturing. We're going to have tax refunds, lower tax rates for individuals across the board. We are also going to have lower regulation continuing, and we're going to see that in the IPO market, the M&A market, and that's going to spur investment activity in financials. And I think technology continues to spur on economic growth. So I think we're going to be clicking from a lot of different areas of the economy, and I think there's reason to be mildly optimistic. Things may not be as smooth as they were this year with very few drawdowns, but I think there's reason to be optimistic in 2026.
Yeah. Tom Lee from Fundstrat tells clients this morning the wall of worry keeps growing given Oracle's 5.5% sell-off and Venezuela, but the risk-reward still positive into the year end. You agree? Do you want to put new money to work in stocks today?
Well, I think the Oracle worries, they're legitimate insofar as debt is always a big enemy. Too much debt, too much leverage, that can really bring down companies. Obviously, the extreme case is 2008. So I think Oracle really is a one-off. I think they'll work their problems out. And I think that companies who have a lot of cash on their balance sheet, who are involved in technology in the AI space, look, the hyperscalers, Meta, Alphabet, Amazon, they're in no danger of an Oracle-type problem. They're driving it. The chip makers, Broadcom, NVIDIA, they're thriving with extra demand. They're selling at reasonable multiples, especially after these recent pullbacks. So I think the technology space is sound. I think you're going to see a lot of activity in cyber next year. The closer we get to quantum being a reality, the more we're going to need to beef up cybersecurity stocks. So you're going to have technology boosting from many different areas, and it's not just one company anymore. NVIDIA's having competition. That's good. The build out in the data center has tangential benefits in industrial space. You've seen already the run up in utilities. So I think across the board, technology is everywhere. It's going to stay that way. And the tech-enabled companies, whether they're financials or in manufacturing or transportation, the tech-enabled companies that are using all of this are going to continue to thrive in 2026.
Yeah, I mean, part of the selling yesterday may very well be attributed to the story which was first reported by the FT, that Oracle's funding issues for Michigan's AI data center are problematic. Blue Owl not backing this new build in Michigan. They're walking away. So that's one of the problems. But I want to get your take on the business of Wall Street for the new year. Medline was a huge IPO yesterday. It surged better than 40% in its market debut after raising $6 billion. This was the biggest American IPO since 2021. Interestingly, this was backed by Blackstone and Carlyle. They priced at $29 a share, valuing the medical supplier at better than $50 billion. The strong debut signals renewed investor appetite as bankers watch for potentially blockbuster 26 IPO pipeline. You've got companies like SpaceX and Anthropic considering going public next year. And Jamie Dimon was just with me last week, the CEO of JP Morgan, who also told me that after this government shutdown, you've got a really nice lineup of companies ready to go public. Watch thoughts.
Well, he's absolutely right. And this government shutdown, the SEC, it's ridiculous. They couldn't even work from home. I was talking to an SEC attorney. He said, can't even work from home. So not only were those 30 days lost, but companies who anticipated the shutdown, they stopped going forward and initiating. So I think there truly is a backlog. You know, the Medline story is amazing. This is a company founded in 1966 in Illinois, first family run. They sell hundreds of thousands of everyday products to thousands of healthcare centers, surgery centers, nursing homes. It is a great company, but yesterday's movement tells me one of two things. There's either a mispricing on the low side by the investment bankers that took it public, or there's a little bit of greed chasing return, because this is not a tech company. It shouldn't come close to doubling in the first day, and I think selling it near a 45 multiple is a little rich for a great company, but one that makes products that is more traditional. I think, though, however, that is just the beginning. We're seeing an appetite from the consumer for more of this, and with those great tech companies that you mentioned earlier, and SpaceX and Anthropic and OpenAI, if a Medline can do that, look out in 2026 for companies with a little more sizzle when they come public.
Good point. All right, we got the CPI out this morning, Consumer Price Index, big factor for markets. What do you think?
I think everybody's expecting a number around 3, between 2.5 and 3. The closer we get to 2.5, that would be great for investors, because then the Fed has a little less worry about inflation and can continue their rate easing cycle into next year. We get closer to 3%, I think we're going to have a real battle inside the Fed between whether or not to alleviate that slightly higher unemployment number versus this 3% inflation. So I think we are rooting for something in the mid-2s, not closer to 3, and we'll have to see where the number comes out.
Yeah, we'll see at 8:30 this morning, but of course it is all about the Fed. Once we get those numbers, we'll talk about it. Mark, great to see you. Thank you, Mark Avallone.